The scariest part of a housing downturn isn't when prices fall, it's the moment before, when everything looks fine, but nobody's confident anymore. And that's where Chicago is right now. And today, I'm breaking down the stats, the behavior, and the emotional signals that show up right before the market quietly rolls over. I help people relocate all over the Chicago suburbs, and lately, conversations have changed. Less excitement, a little more hesitation, more people asking, should I wait? And when that question starts showing up everywhere, it's usually not random. It's the market telling you something very quietly. Now, this isn't a doom video, and this isn't 2008, but Chicago doesn't break loudly. It slows, it softens, and one day people wake up and realize the leverage is gone. To understand why this matters, you have to look at the pressure building underneath the surface. Now, let's start with the math. First off, this isn't Florida yet. We're not sitting on a year of inventory, so prices still are high. Rates are still usually 6% or greater, and if you ask anyone, they'll all say, well, it's not the 3% that I got. Taxes never went down. I mean, we're the number 2 in highest taxes in the US. Insurance is up, but that's a whole other video. And everything just keeps rising, so even buyers who qualify don't feel as comfortable as they used to a couple years ago. They're approved, but they're also hesitant. And hesitation definitely kills momentum. When these buyers stop stretching their budgets, sellers lose a little bit of that control. Even if the prices don't immediately fall, you will see them change. Now, this is where Chicago's different. In other markets, high values hurt buyers. In Illinois, high values hurt kind of everybody. Higher assessed values mean higher taxes. You might have seen people complain recently that their tax bill has jumped 50% or 100% in Chicago, which means bigger monthly payments. Sellers have less flexibility because they really can't downsize. They're not really saving money anymore. They need every dollar that they can get. And the buyers, they're having a hard time seeing outweighing renting right now, which means they don't see the upside that they used to. I'm seeing longtime owners listing not because they have to, but because taxes finally made the house feel like a burden. They're not panic selling, but they're trying to release some of that pressure they're feeling. And by the way, if you're thinking of relocating to Chicago or the suburbs, this is what I do every single day. So feel free to give me a call right here. Let's dive into one of the main reasons that keep prices high, and it's hurting everybody. This is the part people misunderstand. Inventory isn't flooding the market. You want to know something crazy? We're still sitting with lower inventory mostly than we had in 2019. Despite every news outlet telling you everyone is running from Chicago, it's a dumpster fire. Well, if that was the case, we'd probably have the same kind of inventory Florida has, wouldn't we? Now, it seems that we don't have that mass exodus that you keep seeing on the news. In some places, we still have less than 2 months inventory. So what's going on then? Well, what you're really starting to see is homes are sitting longer, price cuts are becoming normal again, just testing the market listings, they're getting punished. And sellers who missed 2021 and 2022 windows are learning this lesson very hard. The market doesn't care what the neighbor got. It doesn't care what the house 6 months ago sold for. It truly doesn't care what you think. Some sellers still think, oh, the house just needs paint, just some new carpet, just light reno. But buyers walk in and the home looks like it's beat. And that's what they're seeing. That was all cool during COVID when everything was moving. But when buyers start to feel the squeeze from the prices, the rates, everything in their lives, they start to get pickier than they used to be. You see, there's one type of listing still flying off the shelf, and we're going to get to that later in the video, but let's talk about the real dangers here and what's going on. Chicago isn't just dealing with housing pressure, it's kind of dealing with fatigue. From taxes, traffic, the crime headlines, the cost of living still goes up. Even people who love Chicago are quietly asking, is it still worth it? You see, I was taking my daughter to the bus stop and it was freezing outside. Even I asked myself, I wonder what it's like in South Carolina. What about Bentonville, Arkansas? How far does my money really stretch other places? And I know if I'm asking these questions on the frigid walks to school or the bus, then other people probably are too. So here's what most people are getting wrong. A Chicago housing crash will not look like 2008. No massive foreclosures, no 30-40% drops overnight, chaos. See, this isn't The Big Short. We don't have 10 months of piled up inventory waiting for this explosion. Instead, it looks kind of like we're seeing now. flat prices for a year or two. Certain neighborhoods are slowly declining because they're losing some of their upside due to the high taxes, their okay location. The price of entry is just not sustainable for some people anymore. Now, the high taxes, low value proposition areas aren't seeing growth like they used to. And the ugly properties, well, they can't sell because they're really not worth it anymore. Nobody cares. They're starting to drag down the values of other homes around them. See, it's not a crash, it's an erosion of value. And erosion is worse because it's slow enough, people still stay in denial, and we're seeing it every day. Now, if you're finding yourself having questions about the Chicago market, give me a call or sign up for my weekly emails here, where I keep you updated on the market, local shops, places to check out, and so much more. Now, you're probably still wondering which homes are flying off the shelf, right? So let's get into it. Over this year, I started asking the same questions, looking for the same trends. I was taking out buyers in different price points from $300,000 all the way up to $1 million. I mean, I was driving all over the Chicagoland area. And then one day it clicked. Once I started really diving into which listings are selling and which were just kind of sitting like a bag of stale chips you put in your pantry that you kind of forgot about. The homes that were selling quickly were the ones that were out positioning the competition. And here's exactly what I mean. The homes that are move-in ready, they're clean, semi to fully updated. They've been staged perfectly. Even the homes that are a little outdated but are immaculately kept, they want and they draw the buyers in and they make them fall in love with that. You see, a staged home on average can sell for about 6 to 10% more, and an updated home can sell between 10 and 20% more, depending on area and price point, and it all does change. Now let me walk you through a few stories that just recently happened. I walked through a home for a buyer that was $300,000, needing some updates. It's been on the market 130 days. And a competitor came on the market, new carpet, fresh paint. It just looked very clean to any buyer walking through. Same price point as well. It took multiple offers in 4 days. Still think it's a crash? And at the $550 price point, there were 5 homes sitting on the market, 30, 45, 100 days. And they're just not selling. And again, another home hits the market, my buyers immediately want to see it, they fall in love with it. It took multiple offers in 2 days. You see, this is happening all over Chicago because buyers are tired of spending top tier dollars for outdated, needs reno, nothing special homes. They're starting to be particular with what they're willing to pay for. So who's feeling this? Is probably what you're asking, right? The sellers that have homes with bad layouts, crazy taxes, outdated finishes, and the sellers that still have unrealistic expectations that aren't pricing them accordingly. I'm not here to throw shade at any agents, but I'm still seeing far too many listings with grandma's flip phone 2 megapixel camera pictures, crooked photos. It looks like they fell off the stairs taking the photos, okay? Homes that haven't been cleaned in years, they look like they're lived in, and I mean lived in. I recently saw a listing with a photo of a lamp in the shower. And I had to share it with my wife because who does this? Listen, I'm not sure what the thought process was, but hey, don't put a lamp in the shower. I know every situation is different, but come on, we're not selling $5,000 92 Honda Civics. We're not at a used car lot. We're selling someone's most expensive asset most of the time. And buyers who are looking for homes won't even leave their couch if the first few photos don't interest them. Now tell me in the comments below, how many times have you seen a home, sent it to your friends or significant other, and you're like, what the fuck? All right, just let me know below. Here's what I expect to see across Chicago and the suburbs in 2026. You'll still see sales, but it'll be just a little bit different. Sellers who price emotionally will sit, and the sellers who price honestly and know how to attract the most buyers, they're still gonna sell very, very well. You see, buyers aren't gonna rush, they're gonna ask more questions now. They're gonna be pickier, they're gonna care about the taxes, the home layouts, and their monthly costs. The old adage of, oh, someone will buy it, will probably start to fade away. And the reality will set in, no one's coming to buy it. This is where things start to feel uncomfortable. Next year, we'll punish these crazy high-taxed homes with no real lifestyle upside to them. The odd renovations that make no sense. The poor locations that really aren't sought after, not near highways. The homes with so much deferred maintenance, you might as well bulldoze it and start again. Please do some maintenance. Now, the great homes will still sell, and they're gonna sell well. And the bad homes, well, they're probably gonna become relics, sitting for hundreds of days. We're already starting to see it. Markets don't announce the turning points. They just kind of whisper. And right now, Chicago's whispering quietly. So if you're buying, selling, or holding a property here, the goal isn't fear, it's to position. Because the next phase of the market, they're not going to reward your hopes. It'll greatly reward the strategy you use. And here's the harsh reality. Chicago isn't collapsing. It's just normalizing. You don't need a crash to buy well. You just need a market where sellers stop setting terms and the buyers finally have a little bit of room to breathe, which is what they see now. That's exactly what's happening in some of these suburbs. It's not overnight, it's not everywhere, but it's enough that the advantage is slowly shifting to the buyers. More time, more choices, and a little more leverage. And if you're waiting for some dramatic moment where prices suddenly fall off a cliff, you're probably going to miss the quieter opportunity that's happening right now in Chicago. And it's right in front of you. Because the best buyers, they don't chase the bottom. They buy when the pressure comes off. So if you're thinking about buying in Chicago or the suburbs, this next phase isn't something to fear. It's something to understand and to use to your advantage. If you're still trying to figure out which suburb is the right fit for you, then make sure to watch my next video where I go over towns that should be on your radar based on the metros, the highways, schools, close to everything that's important here. And I'll see you in the next video.